Can you hear me? What about now? Now? Yeah. All right. Can you guys hear me? All right. You know, when they told me that I was going to do a workshop, I was like, great, that's the part of the conference no one shows up to. And here you guys are, so I guess I lied. Thanks for coming. Excited to kind of talk about this. This is actually something that we've been talking about a lot internally at H. Bradley, where I work. Kind of a fun topic, kind of a neat time. I hope this is going to be very interactive. There's a couple of like interactive hands-on sessions. I won't try to put any pink bows in your hair or make you do jumping jacks in the corner, but I will try to get some feedback out of the audience and pull some people in for discussion. But this session is going to be about building for the customer that you want. For those of you that don't know me, I'm Zach. I'm the co-founder and janitor of H. Bradley. Sometimes they call me the CEO, not usually. And ultimately, this session is sort of near and dear to me because of how we think about building product. And if you don't know what H. Bradley is, we are a bank account that pays you more when you save more of what comes in. Which is very different from what your typical bank account has probably done for the last 100 years. And very much the product building for us was about building for the customer that we wanted, which for us was a saver. We had to know who that customer was early. We did a lot of interviews. We did a lot of talking to people before we built anything. And in a world where, in the last 24 hours, I would bet that some of you have talked to some vendor that said something like, we can help you ship a product with, 24 hours or 6 weeks with our APIs, right? That's sort of what you hear all the time now. Everything is about speed to market. And I guess what we're going to try to do today is we're going to try to build a new credit card. And we're going to see if we can do that in 24 hours. And I think the point of this, hopefully coming away, is that if you rush to market with the wrong product, it will never matter. You'll build something for a customer that maybe doesn't exist. And so hopefully what this session will do is kind of help us get an idea of like, if in this world of speed, in this world of let's get something out the door, can you actually build something that fast? And if you do, will it be successful? And I'll let kind of all of you decide on the takeaways here as that happens. But I promise this session will be interactive, and so I actually kind of want to start, and I've got my notebook over here to write some ideas down. So I'm going to have everyone shout some ideas at me on what building a new credit card would be like. So let's just roll into it, right? What features do you have to have in a new credit card for you, the consumer? Anybody? Someone shout something at me. I'll write it down and we'll talk about it. Cashback, okay. Sign-up bonus. Points. No fees. Man. Good app. So far we've got sign-up bonus, we've got cashback, we've got no fees, we've got a good app. Diverse payment options, I like that. That's a good one. Disputes. Good looking card. Oh. Metal and no. Okay, metal, no metal. I'm going to write both of those down. You're making my point very well for me right now, so I appreciate that greatly. Metal card. No metal card. And I think what you're all learning from this like really short like version of this segment right here is what this next slide says. So I either wrote this slide while I was writing this or I'm a magician, I'm not sure. But turns out you can't build a product by consensus. It's really hard. And if we did that here, we would have a metal, non-metal card with lots of diverse payment options, points, cashback, no fees, probably no way to make money. So that's kind of the point of this, right? Is if you don't know who the customer is that you're building for or what it is that they want, how do you build? And so that's really what we're going to focus this on. So I think the short, kind of version of this is building a product without a plan is like driving a car without an engine. It's really hard. And I'm the guy that goes on vacation with no itinerary. So, if I'm saying that, it's like I really mean it. And I think that's kind of the point of what I want to talk about today and what I want us to kind of learn today as a team is this is really about knowing who your customer is. It's about knowing what they want, what you're going to provide to them, what value you're going to bring to the table. And ultimately, basically, can you build for the customer that you actually want by understanding who that customer is on a little deeper level? There's a lot of ways to do this. I don't prescribe the H.M. Bradley way as the only way, certainly. I think the way that we view it is it's really about understanding how you work and how the customer that you wants to work with you. So how do they want to do business with you? So I guess ultimately, we probably wouldn't drive a car without an engine, right? That wouldn't make a ton of sense. We wouldn't go very far. The Flintstones did it, I guess, so it's doable, I suppose. But let's just try that session one more time, but I'm gonna give you a little bit of parameters now. So let's try this again. Now we've got parameters around a customer. They've got a higher credit score than a normal user. They're transactors. For those of you that don't know that term, transactors means they don't really carry a balance. That means every month they're paying off their entire credit card. They're not optimizers. Some of you in this room are probably optimizers. That term is a fun one, but basically what that means is everyone's probably, anyone here have a friend that has like a sticky note in their wallet that tells them which card to use where? Yeah. I see a few hands, yeah. Those are optimizers. It's a different type of person, and there are lots of them out there. I know there's at least one person in the audience who's building a product called Max Rewards that actually caters to those users and tells them what to use, right? So these users, they're also heavy spenders, but they also have a sense of pride. And someone said, "Good-looking card," right? That's what I mean by that. Like they want to be proud of actually having this new product in their hands, and they're looking for more modern features. So now I've given you guys some parameters. It's a little bit less of a free-for-all, hopefully. Now, knowing what we know now, let's try this exercise one more time. And who wants to shout some ideas at me on what card are we building now? Metal. Definitely metal. What's funny is we have this debate at H.M. Bradley weekly right now because we have a Discord full of our customers. And most of them want a metal card. Most of them. And then there's like one really vocal customer that's like, I do not want a metal card. Do not ever send me a metal card. So that might actually be up for debate no matter what we do here. But we'll call it metal for the sake of this. Concierge. Oh, okay. I like this. No, so why concierge?
So heavy spenders, sense of pride, and high credit score transactors, maybe they're going to offload or need to solve this problem.
Yeah. Yeah. Okay. So for those of you that didn't hear that, he said, these people are, because they're heavy spenders, because they have this sense of pride, because they're higher credit scores, they might someone just do it for them. So concierge is actually a great suggestion in that context, right? Because now you've actually given me a reason why you're asking for this. Isn't it about you anymore? You're thinking about the customer. That's pretty cool, right? Like, that makes sense. Maybe we should do that more often. Anybody else? With another suggestion? A hefty annual fee. Oh, all right. And why hefty? Is it because they're like? They're high spenders. Yep. Concierge service, and they're premium. Oh, okay. So you expect to pay more for it? Exactly. Okay. All right. I buy that. That's And see, now what we're doing in this exercise, which is actually really fun, is we're now thinking about not ourselves or like what we selfishly want. You notice that like the first time when anyone yelled at a fee, you know what they said? They said no fees. And now when I describe the customer to you, what do I hear? The first fee answer is a hefty fee. Now we want a large fee. So why do you think that is? I mean, I would say probably because when we're talking about, in a theoretical world, a product that doesn't exist yet, sure, I don't want to pay for it. But now that we've actually laid it out and we've put some standards around it, we've given ourselves some guide rails, we've now said, oh, okay, well, that customer will pay. And, I mean, ironically, that was a huge part of the premise for H. Bradley originally, was I kept hearing, no fees, get paid early. And as a consumer, I was like, I get paid early once. Then I'm in the same 14-day cycle. What am I doing now? I just got paid 2 days early the first time. And that, to me, it just wasn't an attractive, I get it's a hook for some, it wasn't for me. When I said no fees, I thought, when's the last time I paid a fee to Wells Fargo or Chase? It's been a long time. And that, I think, to us and what we were building for was very clear. It was that customer that we were going to build for didn't have those pain points. And so we had to find different ones. And so that's really, I think, what this exercise and what our exercise in building the product originally was about. It's about that idea of defining who the customer is incredibly clearly. All right, so let's dive a little deeper. By the way, this is a 90-minute session, if you guys didn't know. So you're going to get really tired of me asking you questions because I can't talk for 90 minutes. So, all right, we've got now definitely metal. We'll go with whoever yelled that out. Sorry for the non-metal folks, or probably the one guy. I think it was you, right? All right. So, all right, you lost on metal, but now we've got a metal card, we've got a concierge, and we've got a hefty annual fee. So, what about you? What's going to keep you actually wanting this card? Like, what do you think out of these users? What do you think is going to make someone come and walk through the door?
I think extra services.
Extra services. All right, let's define services because that's a broad range, right? So what does extra services mean to you? Is it about where you're spending? Is it about how? I mean, so of these topics here, what of these would kind of qualify and say okay, extra services might mean what? They're not optimizers, so they're not going to the grocery store and trying to figure out, oh, you got one.
Yeah, so this is my identity, right? So if I have this card, and then I walk to Hawaii somewhere nice, and you're like, oh, this guy has this black card or something, let's help him out, right? We know who he is.
Yep.
That's what I'm looking for here.
Okay, so it's like something between the concierge and the actual rewards, right? So it's this idea that now this card has transformed me from a person to a somebody all of a sudden, right? So you want the card to become a part of your identity. I don't know how we do this, but this will be a fun product. I'm already trying to imagine how we build this into something, but we're gonna go with it. By the way, I'm not kidding. It's totally interactive. We're gonna do this in real time and figure out how we can make this happen. All right. So you want to be a somebody by having this card. I hope we have a heavy advertising budget. We should have talked about budget earlier. Man, no one told me we had to talk about that. I see what's.
The exclusive nature of this card might be important to a sense of pride, right?
Yeah.
That's why that has to be, but the airport lounge accesses and whatnot, you get with the Amex Black card.
Airport lounge access.
Sense of pride to think again is black, I feel like.
Yeah. I love that people just skipped the platinum, went straight to black. It's, in everyone's dream world, we're all that rich, right? I have a running joke with my wife. I have a yacht dealer. He after every fundraising round, I get a congratulations announcement email from my yacht dealer, and he sends me a new yacht that I could buy. And usually they're in the range of $20 to $50 million, and I don't have that kind of money if you haven't figured that out yet. And so I just tell my wife now that I'm just trying to be the man my yacht dealer already thinks I am. So maybe that's what we're trying to do here. We're just trying to build the card that our yacht dealer thinks we are, right? Okay, all right, so airport lounge access, I buy that. I think we could probably get that. That's probably closer to a platinum benefit than a black maybe, but so that's good. That's kind of in the range we want to be in. What else? I mean, as consumers, we're all doing something. There's a lot of things that we're looking for, but what do you think today is necessary that maybe wasn't necessary 3 to 4 years ago for this customer in particular?
You need to have an incredible mobile experience.
Incredible mobile experience. I actually agree with that. You know what's funny though? I think it's table stakes, right? Like Chase's app isn't that bad. Like, right? Like when's the last time you logged into Chase and thought, man, this thing sucks? It's probably been a while. Yesterday. Oh, shots fired. If you're in the room from JP Morgan, that's David from Max Rewards, and he's here to fight. But yeah, I buy the exceptional mobile experience. And actually, when you're thinking about that, like, are you thinking about like, as a user, I want to be able to have like push notifications directly? Are you thinking about like, I want to dispute on the phone? Like, what is it that makes it exceptional for you in a mobile experience?
Being able to do what you want to do inside that app. You need to be able to see where you're spending, if there's some smart insights that it can give you, automate anything that you're doing.
Yeah, I mean, what you just said is actually spot on. Do what you want to do, right? That's such an easy concept. It's really hard for banks though, right? Like, they want you to do what they want you to do, not what you want to do. That's a very different thing. But I like the point of like, look, whatever it is, it doesn't really matter. We have a running topic that we talk about all the time now, which is sort of, is it possible to sort of, build something where the consumer really gets to do anything they want in a world where like you might actually want like charts and graphs, and can you do that on a mobile phone? So like maybe there's some reason to have a web app too, but like the mobile experience I think makes a ton of sense, right? Like that makes it pretty clear. And what you're saying is just, it needs to have every single thing that this customer can do throughout the experience on a mobile phone. You think that's because the customer's always on the go? You think they travel a lot? Like you just
Not necessarily.
No, just
But I think also in that experience, like if you do have a question, you need to be able to have it answered by someone who's competent relatively quickly.
okay. So you want competent customer support. You guys are very expensive customers. All right. So now we also need to be able to answer these questions. But I mean, I guess if you build the right products, like you probably answer a lot of the questions on your own, right? It's actually funny. It's one of the things that we've found out along the way that I found super interesting, which is at Agent Bradley, there's actually a negative correlation to the more money a customer has with us, the easier they become to service somehow. And it turns out it's like there's a lot of reasons for that, but I think one of which is just that they're not worried about it, right? They're already sort of there, but this is a credit card. This might be different, right? This is something where you're probably mad with it, although ironically, the card that I've had declined most in my life is my Amex, so maybe not. Anyone else have the experience with Amex? Like, you just like randomly get declines, and then like they call you and they fix it and you rerun it, but it's kind of annoying, right? Maybe we don't want that. Do we not want that here? What do you guys think? All right, I'm gonna say no declines. That seems fair. Or at least like know why, right? Okay, so now we've got a card that's definitely metal. It's got a concierge. It's Oh, wait, I have a great story about this. Hold on, I'm gonna detour. He said wood. This is a really good story. If this guy's in the room, I'm really sorry. I don't see him, so I don't think he is. But several years ago, there was a guy at Capital One that had this wonderful idea to build a new card. And he wanted it to be wood because he thought that would be cool and differentiated. And not only that, he thought, why do we have this stupid square card anyways? Like, why do we need square cards? Like, why don't we shape this thing like a surfboard? That'd be cool. And people were like, yeah, let's do that. Like, let's build the surfboard-shaped card. This is going to be awesome. And they got it all the way through the rung of approvals at Capital One. This guy's essentially betting his career on this wooden surfboard-shaped card. I don't know why that's the hill he chose to die on, but apparently that's what happened. And they spent, the minimum on, Capital One size card orders of, 1 million cards at a few dollars each to get these wooden cards in. And they went out in the world to test these beautiful wooden surfboard-shaped cards that they had done no consumer testing on whatsoever. And a really interesting conundrum happened when in the field they started realizing if you don't insert this card perfectly, it doesn't fit in that square credit card slot that those readers have for chips. And that guy does not work at Capital One anymore. So it's a good example of like what happens when you maybe don't think about like what the customer experience is, right? And since this panel is about the customer experience and like what we're doing, like maybe let's not make a surfboard shaped card. That's probably a good idea. All right, and outside of that, we've got a pretty hefty annual fee because our customers are fancy. We're going to have some really nice airport lounge access. I like that one. That's good. Do that means they travel a lot? Do we need travel rewards? Anybody think we need like some kind of like hotel or like planes? Like we can't we don't have the budget of Chase, so we can't build like a new United card. We don't have $2 billion a year to hand out. But like, what do you think we need to make this attractive to this user? Partnerships. What kind of partnerships? Oh, okay. So just generally travel. So do we like, if we want to do this right, do you think that we go to a handful of brands that we think our customers might align with? Or do you think that we just like try to go broad? Like, do you think these customers are going to fly Spirit Airlines, for instance? Should we go get a Spirit partnership going? No. All right. No Spirit. Got it.
Companies like Booking.com and has such that provide Expedia.
Yep. Okay. So yeah. So like, where you're buying, maybe. Like, maybe that's a piece of this. Is like, let's meet the customer where they are. Maybe. Okay. And I guess that customer is probably because they're used to being met where they are and everything else they're doing, right? Okay, that makes sense. I buy that. All right. Exclusive events. Ooh, what if we made this really fun? What if we just made it, when you buy a ticket to an event, one of our customers that uses this card is going to end up backstage with the artist? Like, would that be enough? Would that make you want to use it? So maybe it's like randomized, customized rewards, right? Like maybe it's not everybody can do it because it turns out if you're, 500 million customers, it's going to be really hard to give everyone exclusive access. But maybe that could work. Okay, like that's something we can work off of, I think.
Oh, we should buy a private jet and then just like.
You guys are killing me. Like, how much is this annual fee going to be? A private jet.
Well, they can use it, like they can book it once per year, like first come, first serve.
Book it once per year. Okay, all right. You know what's funny? All right, another story time. I'm going to tell too many stories today. I once went to Cabo with a friend's family, and I'm from Louisiana, for those of you who don't know that about me, so I didn't grow up very fancy. And they said, hey, we're going to go out on my dad's boat. And I was like, oh, a boat, cool. And I was with a girl I was dating at the time. And I was like, oh, yeah, we got to get like, plastic bags for our cell phones, got to make sure that like they don't get wet, like whatever. And I'm like, prepared, right? Like I'm going to this boat. I'm going to make sure that I'm not like getting water splashed all over my cell phone. And then we get there and the boat was an 80-foot yacht. And I was like, oh, okay. And there's a connection here, I promise. And so we hang out on the boat and we kind of play and do whatever. And at the end of the day, I'm like, I'm a nice Southern gentleman. I'm trying to be kind, right? And so I'm like, I should ask if I can pay for the gas, because like that would be the nice thing to do, right? Like, yeah, like let me pay for the gas because like you guys took us out. It was very kind of you. And so I was like, I should probably ask like the crew first, like, hey, how much does this thing cost to run? We'd been out about 6 hours, by the time we came back and docked. And I said, hey, like I was thinking like it'd be really nice to do something, for the owner. And like, we don't know him all that well. Let's have his boat all day. Like, how much do you think this thing costs to run like today? And he was like, well, it's usually about $10,000 an hour, so probably $60,000. And I was like, oh, shit. So that's why I brought that up, because when I thought about the private jet, it's like, sounds great, but I bet jet fuel is pretty expensive too. So yeah, I bought him a putter instead. That seemed like much more in my budget price range. So maybe we can have a budget version of a jet. Maybe we can like do a partnership with like NetJets or somebody. And hot air balloon. Wait, what? Do you travel by hot air balloons, sir?
Let's not do a jet, let's do a hot air balloon.
Wait, okay, all right. Show of hands. Who in this room has ever been in a hot air balloon? Shit, that's higher than I thought. He might be right. I'm going to put a hot air balloon question mark on this. Like, I think that's where we're going to go.
Are we that client? So just the number of hands up may not be.
It's true. Yeah. I you know, of all the things I anticipated today, I never thought hot air balloon would come up. Interesting. Okay. All right. So for me, I'll pick one because I haven't got to pick any features yet. But I think virtual cards for me are a must today. Right. I want to be able to have my card on a website, and I don't worry if they get hacked. It's fine because it only worked on that website. It only worked in that one place. I'm not going in and replacing my card in 15 places anymore because it's 2021. So I'm gonna add virtual cards to that list. Anyone have any objection there? Seems fair? All right, cool. So I made some predictions and you guys helped me out on the last two. I had to add virtual cards of my own. But this is kind of what I thought was going to have. You know, the other thing is that we talked about the visual appeal of the card. We didn't talk about the packaging, right? The packaging is actually pretty important in a card like this. You know, and I think we've all seen it with products like, you know, anything that Apple builds, frankly. But Nest, there's a lot of others now, and you realize that in the packaging, you have a chance to make a really great first impression on a customer. And for a lot of years, I think we've all been handed a card in a white envelope that's like, here you go. And so I think that's one of the things that we can differentiate based on, right? We can actually like build that. The other thing on the rewards front, and I think you guys have already really hit on this super well, you know, is like, hey, great, we've got, you know, a set of things that are kind of broad. But broad means they can adapt to a broader user base. And I think that's a pretty big win on sort of where we can go here and how we can build something. So, I mean, I think from here, it's now we've got some sort of plan. We've actually talked about the customer. I guess now it's really like, how do you build with that customer in mind? How do you think about them every step of the way? So anyone in here manage a product of some sort? A few people, yeah? How many of you manage a product without ever thinking about the customer? Okay, good. All right, I was gonna tell your boss to fire you if you raised your hand, so it was. And I think hopefully that's one of the takeaways that we can end up with here is that we need to be along the way understanding not only the requirements, but who the customer is and how they're going to adapt to it. So now that we've got some of those requirements and there's a clear path, we know our audience a little bit better, both you guys and the customer now. You know, now it's like, how do we go about doing this? And I think the short answer is that you really have to be a stickler for the rules, which is not a fun thing to say, right? But you know, I have this very brazen quote at the bottom here that says, "This is war." But honestly, it is a war in some ways to always be reminding everyone that you're fighting for the customer at all times. That's sort of what you have to do to build something. To build something that will actually work across your user base is you've got to find a set of rules and you've got to stick to those rules. And hopefully you can do that. What's up?
Who are you fighting?
Well, I mean, you don't have to fight with anybody, but you will fight. You will fight. So you'll fight with engineering, you'll fight with product. And the reason is there will always be somebody with a different idea. Usually that person's me. I throw grenades at our team all the time. You can ask anyone that works at H. Bradley. I'll walk in on any random name, like, what if we did this? And every product person that we hire, I tell them, like, your job is going to be hell sometimes because I'm going to walk in with this crazy idea and you're going to have to talk me off a ledge. And so the ultimate answer is like, you're fighting internally with yourself, you're fighting externally with your team, but what you should be doing is using that in a way to think about the customer over and over. And I think that's always the goal, I think, from any product perspective is how do you do that? So I guess, what I want to do is talk a little bit about how we do this. And like I said, this is not prescriptive. I'm not saying that like this is the only way to build a product. In fact, we didn't do this ourselves. There's a quote, good artist copy, great artist steal. We work backwards. And working backwards means you start with the announcement that you're going to give to the customer on the product. We stole that from Amazon. So that wasn't new. That was something that we just took from them. We thought it was a pretty good idea. But the reason we start there is because we're working from the end so we can lead to the beginning that we want to have. And I think that what you're usually trying to do in that is you're trying to kind of lay out, what does this look like for the customer? So now that we've got like our set of product requirements and we sort of know who our customer is a little bit better, if we were writing a press release, like do we think what we've talked about today so far would go well into what we're doing, or do you think we need to adapt that, knowing that now we're having to talk about not just the features the card has, but like who the customer is, how they're going to use it, how we're presenting it? Anyone think we should probably like start kind of chewing on what other things that we could talk through there? So, all right, so if you were going to announce this, what would be the thing that you think that maybe we haven't talked about yet that we might need to hit on now? Talk to the customers. Man, you guys are smart. So it's going back and asking, just, hey, like, what's going to get you excited about this? Are these like 5 or 10 features that we had? Like, is it the fact that it's a heavy metal card going to help you? So it's just going back and learning from your people all over again. So you start at the beginning by thinking about the customer, and now you go and validate it before you build anything. Shit, guys, how are we going to build this in 24 hours, though? I'm trying to launch in 6 weeks. What are we doing? All these guys with APIs told me we could build this really fast. All right, fair enough. That was a decent joke. Someone could have laughed. I mean, come on. In my head, there was 2 laughs out of that for sure. That seems fair. Yeah, 9 a.m. workshop. It was like they clearly just wanted to give me the crowd that was like half asleep. I'm telling you, I just never knew people came to these workshops at conferences. I just learning something every day. All right, so let's go back and talk to our customers a little bit. When we're talking to them, and this is one of the things that I actually spend way too much time thinking about, but how do we do it in a way that maybe doesn't lead to biases, right? Because if I'm a good lawyer, I try to ask leading questions that the judge can't notice, right? But if I'm a good product manager, I probably don't want to ask leading questions. I probably want to get down to why it is that you asked for that. So, you asked for a couple things. You wanted a heavy metal card, right? You wanted some rewards. So why is it that you thought you wanted those things?
Just based on what I used today. Honestly, right? And I think one of the big things I see when I want to rewards is one of the things that I'm coming across is I don't use the rewards platform as much as I used to, right? Because I know that if I can move points to cash,
Yep.
10x on it, right? I'm basically making 10 cents versus 1 cent on a dollar, right? So that's the reason why I want to see the heavy metal card. I don't know, when I hand it over to someone, it feels like 1 cent, right? I feel a little more important, right? So the whole experience is about me.
Yeah. Yeah, it's a feeling, right? You want to be part of something. That's a cool way to think about this. I think it's a nice way to kind of, also the points rewards thing is an interesting topic there, right? Because we're in this weird era where, we're talking about building a credit card right now, right? This is a credit card product, and somebody probably told you credit cards were mean, that they're bad, right? We shouldn't use those. But when you start talking, and you're talking about the math behind it, one of the most interesting things to me is that in 2021, if you're spending money on a debit card, you're losing money. Because the price of interchange is baked into every single thing that you buy. And you're ultimately going to get less rewards by using a debit card than a credit card, unless some VC is subsidizing you, which will last for some period of time. I didn't say who. But, I mean, it's actually really interesting because now we're in this world where, like, there's your war, right? Like, you ask who are you fighting? You're fighting, like, education. So I guess one of the questions that I kind of have in thinking about this is, do we have to go back and try to explain that story? Do we need to educate the customer in how we're thinking about this and how we're building this? To say that, hey, like, you're losing money if you're not using this card, right? Like, that's actually the idea that you kind of want someone to know. You sort of want them to understand that, like, this isn't, us being evil. This isn't some scary product. Credit cards can be a really beautiful tool if you use them well. And they also can be a great way to borrow at some level of scale occasionally if you need to. If you're relying on them every month, probably pretty bad. But I think it's one of the things that people don't really think about when we talk about how credit cards are bad and like we just make these like bold sweeping statements. I think the thing that you sort of forget is that anything is bad if you're gluttonous with it, right? Like, I like pizza. If I ate it every night, I'd probably be even wider than I already am. Does that mean pizza is bad? Probably not. So I think ultimately, really what we're trying to do by working backwards here, and we're trying to do by educating the customer on why this matters, is we're really just trying to align the team to the problem or problems that you're solving. In an ideal world, we could solve one problem at all times, right? Like in an ideal world, everything would be one problem, and you could just solve that. That's a really hard task. But I think, one of the easiest ways to think about aligning those problems is probably pretty simple and intuitive for most, which is, if you can't measure it, you really can't manage it. So when you think about starting from that press release and you think about announcing this as a customer, you also must be able to measure what your success metrics are going to be when you launch this product. So when we launch this card product, we need to probably define some success metrics. We should probably set up tracking for those so we can automate at least the reporting of this. And then we should probably have a retro 3 months, maybe 6 months out to say, how is this working? How are we tracking against what we're doing? So we now sort of know, okay, this is what we're doing, this is what's happening. We now think we have a framework to build a product. We've got a couple of ideas on what we're going to put this to paper, but let's define the metrics. Like, so what are the metrics that we think we need to track here for this to be successful? Do we need a lot of cards? Do we need a small number of people who are spending heavily on the cards? Like, what do we think is the best way to measure this? Anybody have any ideas? Revenue. Our VP Finance says revenue. Shocking. All right, so but revenue how? Like revenue in this case is by spending, right? Fees, yeah, well, we're waiving the first year though, right? Do we waive the first year? How does that work? What do you guys think? Do we waive the first year?
No.
Oh, I like this. I like this attitude. All right, no. All right, cool.
You're a VIP, right? You can afford to pay.
All right, so we're gonna say revenue, and that's gonna come in the form of usage, yep, and membership fees. Okay, so now we've got something where we've got one metric. One metric's probably not enough, though, right? Like, usage is great, but is usage alone? Like, do we know if it's the card they're choosing? Like, what events are they going to? Like, where are they going? Are they using the card's benefits but not the card itself? So how do we define that? Like, how do we figure out whether or not like we're becoming the customer's kind of default card? Yeah, I mean, that goes back to talking to customers ultimately, right? It's really about understanding what they told us they were going to do, and then what they actually did, and then going back and aligning and saying, okay, they said this, and we're not seeing spend in these categories. How do we realign ourselves to that? So that makes sense. So let's look at category usage. So that's going back to those customer interviews you talked about, right? So now we're essentially, we're going back and we're realigning it to the things that everyone said that they were going to do, which is starting to make a ton of sense. I think the other thing, hopefully, that we can do here is we can actually start understanding the customer's relationship with the different brands that they transact with. And the reason that matters is if I know this person's a regular customer and I know I'm not seeing regular spend of some brand, then I know I'm missing something for some reason. And so what I probably want to do is when I'm just setting up these metrics, I probably want to go and figure out how am I going to keep tracking this user as they grow with us. So that could be by login activity, it could be by payments, it could be by something as simple as going back and, one of the things that a lot of people do in this industry is, you're pulling the report to kind of see what's going on. You can look at usage across other cards. Like what other cards are still active? So maybe it's looking at, am I usurping something or am I just becoming another cog in the wheel, I guess ultimately is maybe what we're looking for there. And all these things have like one thing in common, which is pretty straightforward. But it's that if you're not trying to define these things early, you're probably not going to be successful in building anything. And if you're not setting up a way to go back and look at the end state from the beginning, it's going to be really hard to define success. And I think this is where we probably see so many companies falter, because ultimately you're starting and you're thinking about what maybe you want or some other group of people want, and you didn't define those success metrics really early. And as a result of it, you end up in a place where if it's up and to the right in some way, you just call that the chart that you cared about, and then look, it's up and to the right. And I think that's one of the things that you can take away on building products that for the customer that you want is you should know before you ever launch anything exactly how you're going to define it and exactly what the metric you're going to go by is. Some of you that know me from Twitter probably know that I have a T-shirt somewhere that says, "Grow deposits, commercial lending, more credit cards." Our team knows that those are the goals, right? That's what we have to do to be successful. Those are pretty 3 synthesized versions of something, but what all we're really trying to do is remind every single person every single day that there's a handful of things that we just need to do. And if we're not growing deposits, then we're not doing what we want. So on this credit card, it's like growing spend. It's really getting to top of wallet. It's becoming the default card. And if those are the 3 things that we're trying to measure here, if we're trying to break it down and make it as simple as possible, I think we just have to figure out what are we going to do to go back and do that, and how are we going to measure it. So shortly, I don't have the exact right answer because some of those are hard problems. And I think the long answer might be that we need to kind of redefine how we're going to measure those and decide if there's something else that might matter just as much that's easier to track. And
I just had an idea, this is maybe a bit provocative, but like to the point of exclusivity, should we measure a metric related to exclusivity?
Oh, interesting. So yeah, I mean, if we're going to do that, I actually like this idea. So how do we think we measure it? Do we measure it based on like the cachet of like, I mean, does it have to be like a Sapphire Reserve style launch where everyone like all of a sudden is throwing it down at dinner? Like, how do you measure exclusivity here?
I mean, maybe the number of people you're turning down.
Oh, interesting. God, can we talk about that for a second? Isn't credit weird? Like, isn't it a strange world? I once had a conversation. I was telling someone this last night, and it's like this is strange place where like your credit card company like hands you a credit card and they say, "This is your credit line. It's yours. Use it if you want it." Right? Simple. And then as you reach for that credit line and you use a little bit more of it, they smack you on the hand. They remind you it's actually theirs. It's like, nope, your credit score just went down 30 points because you used too much of that line. What a weird concept. Like, what about the way we apply for credit? That's pretty weird too, right? Like there's a whole site, there's a whole bunch of sites dedicated to us going and becoming our own research analyst and figuring out which credit card we want in our wallet. Maybe we could start there. That'd be a fun way to measure, right? Like maybe it's not about how many we decline, maybe it's about how simple do we make that process? It's one of my least favorite things about the credit card industry is that it's super opaque. You have no idea. And when you get an answer, if you get declined on something, it's like one of 8 terms that the credit bureau has defined already. They don't really say anything. I remember I got turned down once because I had not paid enough of my mortgage down. I was like, what does that mean? Like, it's a 30-year fixed mortgage. What am I supposed to do? Like, how do I fix that problem? There's somebody here from Ramsey Solutions. He'll probably tell me to pay my mortgage down faster. Sorry, Travis, I had to pick on you. I saw you sitting over there. It was only fair. But yeah, I think measuring exclusivity is interesting because it'd be really easy to start and say, hey, let's measure that by how many people we turn down. But maybe turning down is not the right solution either, right? Like maybe it's around and I don't know, I'm spitballing here because you threw an idea at me that I hadn't thought of. But maybe it's around actually building loyalty to the brand with that user because they feel like it's exclusive, right? Because exclusivity is a feeling, ultimately. It's really hard to measure a feeling. But you can probably do it in some customer surveys. You could probably go back and talk to some customers. You can probably get a really good sense of how do you think about this card, now that you have it. So maybe that's one way we can do it. Oh. Man. Yeah. Yeah. So it's almost invite only. Yeah. Anyone that knows my company is probably laughing right now. We're currently on invite only, so I love this idea for many reasons. But yeah, no, it's actually a great way to do it because now you're not only being able to measure what you've done with a referral, right? But you're also able to measure what kind of customers are coming in from those referrals. So are you referring me a customer that I think that I want, that is hitting the other metrics that I wanted? Or are you referring me a customer that just comes in and never uses the card, it sticks in the back of their wallet? Because it turns out those things are expensive too. You gotta manufacture those things, they're not cheap. You get some payback time for the customer, you want some spend. So now you can actually probably take that and figure out, okay, this person sends me great referrals, maybe I should give that person more referrals. Maybe I even define some of our rewards or randomize rewards around who those referrals are. So that's a pretty good idea.
Zach, why don't you make this the transparent card? Debunk the whole industry, show all the users the interchange that the merchants are paying, show them how much money you're making on the card, just completely turn it upside down.
Oh, I like this.
Make the card transparent.
Amex did that once already, unfortunately. Yeah, I do like so that's all right. Let's throw this out here. Now we're at a new product that is late in the game. This is war. You asked what war was. This is war, right? So now, is it worth us changing this late in the game to wait? All of a sudden, does transparency matter? Yep.
And how much, companies capitalizing on them.
Yep.
So, in the vein of war, I'd say, hey, they're transactors and we know that about them. They're going to run a zero balance. Does it really matter to them? It's more complex.
Yeah. So you think actually making it transparent is a little bit, A, away from what we're already talking about, and B, it's really not for the audience that we're talking about. So you're giving me gimmicks over here. You're throwing grenades. Welcome to my life. It's kind of fun though, right?
Yeah.
What if?
What if you could see how much the merchant paid?
Yeah. Yeah, I mean, look, the game of what if is actually one of my favorite games because it's a dangerous road that leads to a product never getting built, right? Oh, what if we did this? What if? But I think what all of these things have in common, what all of you have brought up, that is actually really interesting to me, is you're not trying to build this in a silo, except for you. You're building a silo over here. You just want transparent cards. Nobody asked for that. But like, you're not trying to build in a silo, right? And I think that's kind of one of the takeaways, hopefully, from this is this isn't Field of Dreams. I wrote this line yesterday, and it was funnier at the time, but the building a product in a silo will usually leave you alone in the cornfield. So the takeaway should be you should talk to customers early and often, and you should test ideas, and you should always take feedback with a grain of salt, which is like kind of counterintuitive, right? Because ultimately, there's a great phrase from somebody that probably didn't actually say it that we use all the time, which is, if you ask a customer what they want, they would have told you faster horses. And that's usually pretty true. It turns out, like, if you give someone a greenfield opportunity and just say, tell me what you want, you get a whole bunch of things thrown at you. I think we all saw that, right? And then when you start better defining who that customer is and why you're doing this for them, hopefully what you're getting is something that is a lot more differentiated and a lot more tailored to that customer, and maybe something that you can measure. So I think that's hopefully one of the things that we can take away today is that if you don't define your success metrics early and you don't have a way to measure them as you're building, and you're not being a stickler, then eventually you might end up building something that nobody wants. And no one wants a baseball field in the middle of a cornfield that nobody comes to play in. So I think ultimately, the long and short of it, and the way that I think about it is that, building for the customer you want, it's a marathon, it's not a sprint. And hopefully, if we build this credit card product, we're not thinking about our individual wants or desires, but we're thinking about the customer all the way through. Because if we're building for the customer that we want, it's going to be a long battle, and there's going to be trade-offs that we make. And somebody's going to want a transparent card, and somebody's going to want a non-metal card, and somebody's going to want a metal card. And we've got to make a decision for the customer that we're dealing with. So I think, that's kind of the basic gist. I think the only other takeaway here is, obviously I just said that building for the customer is a marathon, but if you do it right, you should never lose any toenails. Oh, no, come on, man, that was I thought that was going to get a couple laughs too. So yeah, look, I think the long and short of hopefully kind of what we learned today is that if you focus yourself around the customer and you focus your product goals around the customer, you align the incentives, not necessarily like internally or externally, but you align your incentives to say, like, we're going to build it for this person and we're going to measure it this way, it's a lot easier to get yourself on the right track. You can catch lightning in a bottle if you do it some other way. Like I said, there's a lot of ways to build product. But I think one of the fun ways to think about this is can you do it backwards? Like, can you work from the end that you want and end up with the beginning that you hope for? So hopefully that's kind of the takeaway that we leave with here. Also, I know that like this was scheduled for 90 minutes. I'm only an hour in. You guys are probably getting out early because ultimately, I don't think that another 30 minutes of going back and forth and throwing out topics is going to prove any point any more than what we've already said, which is it's really about designing, planning, driving to a conclusion, and then iterating. Because the first version of what you build will never be the version of anything that you wanted it to be. In fact, the first version of anything you build, you're probably embarrassed of at some point if you do it right. So I think that's the one thing that you could kind of always keep in mind here is you're probably never wrong if you're going back to your customers and talking to them and having conversations and using those conversations to measure what you're doing. So I'll leave it at that. I know it's only 10, but I guess we're getting out a little bit early today. So, well, yeah, I mean, obviously questions. Like, Cyber's yelling at me. Questions.
I have a question. So,
Yeah.
we started with a premise that this is going to be our customer.
Yep.
How do you get there?
How do you get there? That's a great question. So how do you decide who's going to be your customer? I think the short answer is you've got to understand the market that you're going after very clearly. The worst thing you can do is build a product in a space that you really don't know, which sounds super easy to understand, but you wouldn't believe how many people try this. So I think you've got to start with an idea and a realization of where do we go, and what does this customer want? And if you don't know, I think you have to go and do the research. You've got to go talk to customers. You got to sit down with them. You got to go look at data. You got to understand where are they spending, what are they doing, how are they doing it, and you've got to really drive to the end state that you want by understanding who you're serving. So I think the short answer is, like, if you don't know who you're serving, you're gonna have a really hard time. The best way to define it is typically just talking to them, and really like getting down. You know, I went through YC in winter 2012, and it was one of PG's last batches there, and everyone knows that he loves to say, talk to users and write code, and he says that a lot. But it's actually a pretty good mantra for a lot of what we're building, right? Is just, I mentioned earlier, I think we've got a Discord. That's how I met David from Max Rewards. You know, it's got a bunch of our customers in it, and talking to them is actually what drives us to think about like how you do that next thing, is because they're not telling us I want this necessarily, but what they are saying is what their pain points are. And if you can pick up on the pain points, you can usually define it pretty well. Anybody else? Questions? Yeah, back there.
I'm curious, when you started HM Bradley, did you have that information? Did you know exactly what you had?
Yeah, I'm a freak of nature. Yes, I spent the 5 years before as a CTO of an investment bank, and that is every child's dream, as you can imagine. So I had a lot of free time on my hands, and I did a ton of research. But I've been fascinated by banks and bank financials and insurance company financials for years. And I also, I wish Shamir was here. I'm on a panel with Shamir tomorrow, who started Simple. And from the day that Simple got started, I was fervently excited about it. I wanted it to work. I'll never forget the day that it sold to BBVA, because it was February 20th, 2014. And I was so mad. It was my birthday. So mad, because I just wanted it to be something that it ended up not being. And I felt like we kind of gave up too early on that. And I think in a lot of ways, when we were starting HM Bradley, you know, we was coming from like, what did we want as users? And the answer was like, just a better user experience. It wasn't the app. That wasn't the problem. It was the way that I got a new product. Like I told them the other day, but my wife and I just bought a house last year. We got a mortgage. We're great customers. I had a mortgage on auto pay for 10 years at Wells Fargo. They shouldn't want to lose me. We put 40% down. Like, we're pretty like good borrowers. Until the day that we signed that paperwork, I was nervous the bank was going to pull out for some reason. That's a feeling. And that's a feeling that you get because of the product they've built and the way that they've done it. And it's a feeling that I think you could make a lot better. And so I think we started from that premise of like, how do you make that feeling? Like, how do you make a customer feel comfortable? How do you make a customer know, hey, you're worthy of this? You don't need to borrow from me. I'm happy to lend to you. And so I think for me, it was so personal. You know, like I grew up in Louisiana. My mom worked for Regions Bank my entire life. I usually joke that Regions Bank is a $20 billion bank that no one's ever heard of. Some people in fintech have obviously heard of it. But my mom worked there 33 years. And when I started my first company, I was 18. And, you know, my mom ran a cash vault. My dad sold fence. We weren't fancy people. We weren't courted by our banks. And I walked into the same bank that my mom had worked at my entire life 2 days after I sold my first company. And my name became Mr. Bruhnke for the first time. It's like, hello, Mr. Bruhnke. Look at all the products and services we have for you. Like, come back in this back room and let me tell you about this stuff. And I guess what should have been a good feeling for me was like a terrible feeling instead. It was like, wait, what? This is what happens? And I think for me, that's so much of what drove us to do this. It was like, I didn't want any customer to ever have to feel that way. And that's why, like, if you look at HM Bradley and the way that we're built, we didn't build it ever based on account balances. The only way we segment customers is by how much income that comes in that you save. And that could be $1 or $10 or $100,000, we don't care. And we also don't pay above $100,000. And the reason for that was we didn't want 10 whales coming in with $10 million each and sinking us because we're paying them tons of interest. What we've gotten based on that is a really great blended user base where the median account balance is really close to the average account balance. And that's, I think, what we had always hoped for. But it was because it was near and dear to me. It was like I grew up knowing and understanding this and deeply understanding what I was hoping for as a consumer. So I guess that's the short answer. It wasn't very short, though.
What are your favorite ways to talk to customers, and are there certain approaches that work at different stages of the bill than others?
Yeah, Twitter is probably my favorite, personally. Sometimes that works well for me, sometimes not as much. I think there's a lot of good answers to that. We have a research team that all they do is put out surveys on like Facebook or marketplaces or whatever, and they have phone calls and they talk to people. And they ask like, hey, what do you think about this? How do you feel about that? For me, it's just being directly accessible. I get way too many random phone calls and text messages from random customers. Probably not the healthiest relationship I have with our customer base, but I like being accessible because I like understanding like what the problems are. I probably wouldn't recommend that for everybody. My wife hates it. She's like, why is this random person calling you at 10 o'clock at night? And why did you answer the phone? But I think the answer is at different stages, you definitely need different things. So like, I think at some stage when you have enough money, you probably need to put together a UX lab, and you probably need to actually like have people come in, and you need to see them use the product. It'd be really hard to do in an early stage startup, right? Like you're not going to have those kind of resources. So, there's also a lot of great tools. Like we use FullStory at H & Bradley. I think FullStory is a great product. We can go back and see these user sessions. We can see like the rage clicks. We can see what's going on inside of that. And so there's so many ways. Our VP of Finance tried to kill it last year. I was not happy about that. But there's so many great ways that I think the short answer is like, there's not a perfect way, right? It's really what you're comfortable with. And I think the other thing that we found too is, if you find a way that works for you, keep doing that. Because ultimately, if you feel comfortable doing it and you enjoy doing it, you're going to do more of it. And it's kind of the same thing that I would tell people about building anything. It's like, if you like what you're doing, you're going to end up doing more of it, and you're going to end up being better at it, ultimately. So I think research is a very personal thing. I think customer reach out's a very personal thing. So I think there's no one right answer. But I would say try a few different avenues, test it out, talk to the users in different ways, tweet at them, let them tweet at you, get terrible, mean DM messages from your customers that you turn down, and figure out what works best. Anybody else? What's up?
How do you know when to prioritize using other services to build your product versus building it yourself?
Coming from the guy who built his own scrapers, I like it. That's a great question. Look, it's funny because we just came from a keynote that we were all probably at where Angela talked about how everything is a service now. And that's pretty true. You can also spend your way into oblivion, essentially, by using everything as a service. And so I think the short answer is you've got to know where your competencies are. So, it's like if you're trying to figure out, do I build, do I buy, what does that look like? And ironically, I'm on a panel on build versus buy tomorrow, so I guess we'll talk about that some. It's really about understanding where you can make a difference. So like our core example of this is like we have a core banking platform. And it's a core provider. Core providers aren't sexy. But you have to have it. You've got to have a ledger. And, the early conversations were, do we build our own ledger? And my early answer to that was, does the customer care if we built our own ledger? Like, having a ledger is a thankless job, right? It's basically, if it does its job, you'll never know. And if it doesn't, everyone will know. And so I think it's about making the trade-offs, thinking about, like, what's going to matter most to your end customer. And so, in your case, it might be like, does your end customer, like, care about, like, the details of the data that you can't get if you're not building your own things? And if the answer is yes, then you're probably doing the right thing by building something yourself. And I think that's kind of the way that you have to make those trade-offs is like, what is affecting the end user of my product? If it's just a money decision, it's typically not a hard decision. Almost nothing is just a money decision, though. So it's really understanding like what you're trying to get out of it and what your customer is getting as a result of you doing this. Because if we'd have gone and built a ledger, our customer would have gotten nothing for it. No one would have known. And frankly, no one would have cared. Unless it broke, and then they would care. Just ask our Robinhood about those problems. So, all right. Anybody else?
How has your sponsor-bank relationships affected what you've brought to market? Any friction points you can share?
Us? Friction points? No. Look, it's a great question. Choosing a sponsor bank is a really difficult, tedious task, which is why when someone says, we can get you to market in 6 weeks, I go, oh God, please don't do that. Like, of all the things that you could do, like, it's like rushing to the altar. And the amount of conversations that I've had in the last couple of years with the founder that like told not to do something, and then they did it anyways, and then they came back and said, now what do I do? And I was like, you're stuck in some ways, right? Like you're either redoing KYC, you didn't meet the standards where you're supposed to be at the new place. Like, how do you do this? How do you move these over? And how painful is it for your customer? Look, our sponsor bank relationship has been relatively good. There's things in the news as of late. We're growing too fast for our sponsor bank, which is a very interesting problem to have. Don't know too many banks that don't like money, but we found one. I think ultimately it's really about trying to align with the sponsor early and understand, okay, where are your thresholds? What is going to be a problem? And then hope that both sides keep their word on that. Because ultimately it can change the dynamic of everything that you do. We went from being an open product with a lot of signups daily to being closed and gated, waiting on referrals to come in. And luckily the growth didn't slow that much, but it could have been a very different world. And I had a really difficult conversation with our board when I said, hey, I want to put out a press release about this. And they were like, you want to what? So, I think the short answer of that is sponsor banks are not simple. They all are very different still to this day. They have their own flavors of what they're used to, and there's a lot of people trying to get into them. And so I think one of the things that everyone should know, like we launched with one that had never done a sponsor program before, and I was okay with it because I knew the industry really well. I've been in fintech for 10 years. I felt really comfortable doing that. I think they learned a lot from us, which is great. I think we learned a lot from them, which is great. So we were okay doing that. I wouldn't recommend that to a lot of programs. Because it can create problems or holes. And so I think it's really about knowing what their competencies are, knowing what their weaknesses are, and hopefully going through that process with them and being open and honest about like what the goals are. And then look, if you do like us and grow way faster than you thought, you might have a different problem. What's up? Yep. Yeah. So for those that didn't hear, he was asking about the packaging and saying that we spent a lot of time on that, and if there was anything in particular, other packaging that we thought was a good experience. I think the short answer is there's a handful. I thought that Apple's use of the packaging to tap the phone to activate the card was really novel. That was a cool concept. Turns out that was something that only Apple could do because Apple Wallet has access to certain things as the hardware device that others don't. But a really good example of something that was like a more like Apple-like sort of magical experience. It was like the first time you connected AirPods. It was like, oh, wow, that was easy. I think there's a lot of people that do things in packaging that are like, here's a wooden box or this thing, whatever. And then there's a lot of, I just got a card not that long ago that came in a plain white envelope again. And I think you do have a different feeling unboxing those things. And when we first launched, we launched a debit card. Comes in this package where you pull the bottom and the card pops out the top. And I started getting immediately messages from other Slack channels screenshotted from other companies being like, they can't afford to keep doing this. This is ridiculous. How could they do this? It was like a 30-cent package. It wasn't that big of a deal. But that was sort of everyone's take was like, you can't do this. And I think the answer is like, it doesn't have to be about how much money you spend. It's got to be about like the actual feeling that you get. And that was what we did. We went and started looking at all the different things that you could do. For me, is when I saw my 72-year-old father-in-law playing with the card packaging, then I was like, we're on to something. He's that was a pretty good indicator that, hey, like we built something that's got pretty broad appeal. And to where I still get emails from customers that say like, hey, my 3-year-old daughter loves this thing. She just runs around all day pulling it back and forth. And so I think it's also just a chance for your brand to get seen and shown that like you're never going to take a picture of a white envelope that came in the mail. And so I think there's brand value in actually spending the time and the effort to do that. So, I mean, I think Apple's the best one I can think of because it was so novel and differentiated. Other people really couldn't do that as much. But I think there's a lot of the fintechs are doing some really cool stuff. BurgoPack, as a company, is doing some really cool packaging. I think they're working on some really interesting stuff. They've been a great partner to us. And I think, we'll continue to see people thinking about that for, a long time to come, hopefully. And I think it will become something where the first impression matters, hopefully, I think. And I think if the first 100 years of finance was about convenience, I think the next 100 might be about experience. At least that's my hope. Cool. Yep.
Do you have any supply chain issues like plastic chips, carriers, or fulfillment issues or any?
Yeah, that's a great question. I'm very fortunate to have a very organized co-founder who had run supply chain at a hardware startup prior to this, who really stayed on top of that stuff. So we ordered chips early when we knew a chip shortage was going to happen, stocked them. We ordered card stock early when we knew that that was going to slow down because of manufacturing slowdowns. So we've kind of always been ahead of it. But when it comes to fulfillment, card printing, oh man, I mean, we use one of the largest card printing facilities in the U.S. We're on Fiserv, which used to be First Data. They print all of Amex's cards, right? They're pretty good at this. Still have fulfillment issues. We'll have a card get stuck somewhere, get lost in the mail. If you haven't watched the news lately, the U.S. Post Office is not all that great at their job sometimes. So that's kind of a not preventable problem. So I think the short answer is I think everyone will run into them somehow. You can plan around a lot of it. I think that's what Tim Cook did incredibly well at Apple when he first got there, was build the supply chain right and make sure that he actually had that shored up. I'm super fortunate to have Dimitri, who did the same thing for us. But at the same time, you're always going to run into something. I think it's, I guess my advice for most people would be in the face of adversity, it's not about the adversity itself, it's about how you react to it and how you deal with your customers in a way to hopefully inspire confidence rather than, maybe not doing that. So you'll have them, it's certainly true. And when you do, it's really just handle as best you can with a smile on your face. I was talking to one of our employees recently, and we were talking about a article that came out on another neobank that was basically just a hit piece. It was pretty rough. And this employee said, well, that's my biggest fear. That's what's going to happen to us, is someone's going to put out this crazy hit piece, and what are we going to do? And I just said, I don't really worry about that. And they said, why? And I said, because I'll just own it. Whatever it is, it's on us at the end of the day. And if we actually did it, you own it, you move forward. That's all you can really do. And I think that's kind of the lesson I would give most founders in those scenarios is you're going to make mistakes. And if you don't, good for you, but I've never met that person. So when you do, the best thing that you can do is just take the lumps, say I'm sorry, move forward as best you can. If you do that, I think most of the time you'll come out a lot better than not.
Can you speak to lessons learned? Developing relationships with regulators and that process getting started and
Yeah.
advice you would have to at the beginning of that journey?
Oh, so many lessons learned. So for people that don't know, I'm a fourth-time founder. Most of you probably never heard of the other three of my companies. So that can tell you I made a lot of mistakes in my life. So yeah, I think those lessons are actually some of the most important things you can do is have a really bad falter somewhere. Now we talk to regulators, and I had a regulator once tell me, you're just an old man in a young man's body. I don't know if that's a compliment or not. But the reasoning was because this is part of where my career came from. So when I turned 18, I started my first company. I sold it when I was 20. I dropped out of college. So I'm a college dropout with no real institutional experience of any sort. And in 2018, I went all the way to the Federal Reserve Board of Governors and got approval to buy part of a bank. That's a pretty weird thing to do. But the thing that I learned along the way, and I spent the 5 years before that, I had a wonderful board around me that taught me a lot, was you're never going to be the smartest person in the room. Just doesn't work out that way. So knowing that is great. But building off of that, the best thing that you can do is listen as often as you can, as much as you can, to the people around you that know more than you. And when you have those learning lessons, own them. And I have a really good example for me. So I started a company. I had a co-founder falling out. I was dating my co-founder. I would never recommend that. If you're doing it now, I'm sorry. And then after, I got another co-founder that's a close friend of mine, and we ended up just kind of soft landing the company. So that's how I ended up at the investment bank. So I was there for about 5 years. And at some point along the way, I had to fire that co-founder. And it was deserved, basically. I mean, he was basically, kind of pitting us against them with the people in New York versus the people in LA. And it was a tough situation. And I avoided it for a little while. It was probably about 3 months where I was like, I know I got to do this, but I can't do it. To make matters worse, he was living with me at the time I fired him, which was really fun. And so finally, we went on a walk, and I said, look, you're becoming a toxic problem at the company to the point where it's affecting other people's jobs. And you're one of my best friends, but this is the best thing for us to do right now. We just have to do it. And we gave him a decent severance, and we didn't talk for about 10 or 11 months. And when I saw him again, when we first reconnected, the first thing he said was, thank you. And I was like, okay. And we kind of got talking, and he said, look, I needed it, and you were right, and it was really tough. But the lesson I took away that was probably the most important lesson in my professional life was I went to the board meeting after I fired him. And we had a board that was great. So, George Scanlon, who was the former CEO of Fidelity National, Chuck Davis, who was the former CEO of Fandango, Artie Minson, who was the CEO of WeWork. These guys had been around boardrooms their entire lives, and I was a 20-something kid, right? So it was pretty cool to watch. And the subject came up that we fired my co-founder, and someone said, well, what happened? And I just owned it. I just said, look, I should have done it 3 months ago. I was having a hard time with it. He's living with me at the time. It was a really rough scenario. I've got no better excuse than tell you, it was becoming toxic to the company, and I knew it. And, that was it. We had to do this. It was a move we had to make. And after the board meeting, one of the board members came up to me, and he said, that was really awesome that you just owned that you just admitted that, hey, you should have done it sooner. Thanks. He's like, it makes it really easy to know that, you're going to do what's best for the company no matter what. And for me, that was, obviously a really tough moment still. It was still pretty kind of ingrained there, but it also reminded me that typically when you do something that you know is the right thing, it's going to be a lot easier to kind of deal with than if you're kind of hiding, what you think might be the truth. And sometimes you don't have to hide it from anybody but yourself. So, I think it's one of the takeaways that I always try to just radical transparency. I am blunt to a point. And for me, that's the lesson I learned is sometimes just being okay to just admittedly fail and admittedly do something bad is, being vulnerable is one of the best ways to become a better leader ultimately, because everyone on our team knows they can hold me accountable. I send Tuesday updates to our team, and I haven't sent mine this week because I filmed it yesterday and I haven't had time to read it yet. But if it's Thursday, somebody on my team will ping me in Slack and say, where's the update this week? Why haven't we seen it yet? And I never write them back and say, hey, piss off. I write them back and say, thank you. Thanks for holding me accountable. I'll get it out. And I think, in a lot of ways, if you can do that and be that sort of vulnerable, I think it'll make you grow a lot more in your career, because it's one of those things where it's hard to admit you're wrong, but if you get to a point where you're admitting you're wrong often, it's actually kind of liberating. So I think that's my takeaway from that, is just it's okay to be wrong. It's actually worse if you're never wrong. All right. Anybody else? Let's wrap. Oh, one more. I do. Yeah. I'll make sure we generate one. So yeah, I'll get you one for sure. All right. Awesome. Thank you guys.